Welcome. Let me know if you guys can hear me all right. I don't want to hear nothing, Kev, of, oh, you're too low or this and that. My volume should be perfect. Tested it like 10 times before getting on.
Sound good to me.
Wow. I don't know. Might be your volume. Might need to bring that up to Kev anyway.
No, not my volume, because the person that just spoke, I heard him loud and clear. I can hear you, but you don't sound as clear as the previous person that just.
What it might be on Discord, if you highlight my name, or like right click on my name, it says user volume. You can bring that up. And then we should be good to go from there. For those on YouTube, welcome. We'll start in about 3 minutes. If you guys can see and hear me, let me know. Welcome, Al. This is your first time in one of these classes? Or AI, I'm not sure if that's a capital I or not. How's everybody Saturday? Welcome, Justin. Hey, Aziz. Welcome, Shane. Your mic is hot. Well, it was hot. We're good now.
I'll shut it off. Hello.
Hey. Still waiting on that DM for your performance this week. I didn't.
So embarrassing, the whole thing.
I did not forget. Patrice blessing us with his presence. Welcome, sir. All right, let's get the party started. Welcome, everybody. This is the Let's Learn with Advent series, March 15, 2025. I am not a financial advisor, at least not yet anyway. I'm a life coach for those who don't know, and a trader coach, all that good stuff. For those who are new to these sessions, we have these every third weekend of the month, usually on Saturdays and Sundays. I'm going to start going to an event that I go on Sundays, so I'm going to push it back to Saturdays as we had before. Usually at 8 p.m. If 7 p.m. works better for you guys, just let me know, and we can definitely accommodate that. Other than that, this session is just like my trader circle, so we all come together. You can ask me whatever you want. It could be up to trading psychology, strategy, really anything, honestly. This is for traders who don't know anything or traders who know a lot. Everybody's welcome. You're more than welcome to invite friends or family. Doesn't really matter. So we can all learn. So excited to be here. And with that being said, you guys can start asking your questions. Put it in the chat. Come off mute. Whatever you want. There is no stupid questions. So whatever you guys want to ask, go for it. The floor is yours.
Hello.
Hey,
Saving Time. I usually never into the market before 9 a.m. And when I was saying that I went in too early, I got in like I felt excited about what was going on, what I was seeing in the charts. And usually that's not really what's going on with the market. It's just people selling off or something to that extent. So I never usually start before 9, and I did that, and I saw some of my selections just drop. So I went in with puts and say, hey, I'm gonna convert it. But I started seeing this bullish market for some reason that I didn't expect, especially if I was reading some news that was just, questionable as to what it was gonna. I felt like it would make things bearish, basically. So anyway, I lost that going in too early. Things looking like it was gonna be bearish, and I played around with something I don't usually even play around with, and that itself got me in trouble. I was messing around with Tesla.
Ooh.
And I felt like I was on the edge of my seat all day. So my question is, how soon do you enter? And do you ever try to ride that initial wave when the market starts?
Good question. So it really depends for me, right? Like all my setups are kind of setup dependent. So let's just say, let's look at Tesla right now. Let me just mark off some levels so we can see it's a little clearer. So let's mark this 4-hour high and this 4-hour low. And let's just go on the 5-minute. Doesn't really matter, 15-minute. So let's say if Tesla opened up under the 4-hour level to trigger us up, as soon as it breaks that level, it doesn't matter to me if it's 3 seconds after the market open or 20 seconds or 20 minutes after the market open. I'm going to get in as soon as that level breaks for that specific setup on that specific time frame, right? I'm not kind of just going to get in just because of news or whatever else might be going on. It's always setup dependent. So if the 4-hour triggers in the first 5 minutes, I'm going to get in the first 5 minutes. And with Tesla, if you're not used to it, usually if it opens up as an inside bar and then triggers a direction, whether that's up or down, it'll probably hit the targets in like less than 3-5 minutes if it has a good amount of momentum. So for me, I just get in as soon as it triggers the trade, and then I just wait and see what happens from there. Now, with your case, from what you mentioned, it sounds like you were paying attention to some news, and one, you got excited, which is very dangerous because emotions are not allowed when we're trading. If you do feel that, you got to step away until you're relaxed, because it's going to cause us to make irrational decisions, especially in trading. So in your case, if your setup appears after 30 minutes, in your case, 9 a.m. Central, from market open, then wait until that passes, or even set like a timer. And until that goes off, then you can't look at the charts. Granted, you can always get on it just to practice your willpower and self-control. But if you find that that doesn't work over time, then definitely just don't even get on the charts until like 5 minutes or 10 minutes before 9 a.m. Central Time. That way you're not enticed to get in. And as a reminder, we always react to what price is doing. We'd never, like trading based off of news, in my opinion, is like 50-50. So it can go well or it can go really bad, especially with Tesla. So generally, you just want to pay attention to what the chart is doing and what the technicals are doing, because that's what's going on right now. Because they can say, Tesla's the worst stock ever. It's going to go to $200, but we're making higher highs or higher lows as an example. Hopefully that made sense. and answered your question.
Thanks.
Of course. For those on YouTube, put your questions in the chat. You can ask me whatever you want. But yeah, Shane, definitely. I know with Tesla, there's been a lot of like bad news because, of course, everything that's going on, and maybe even potentially random good news. Just always pay attention to price because price is telling you what is happening. Where the news, in my opinion, while it can be used for fundamental analysis, for ideas for trades, usually it's geared to manipulate retail traders such as ourselves. And I see that a lot where it's like, oh, well, what's a stock that I can probably, Palantir. Hold on, let's bring a Palantir chart real quick. So in the $100 range area, I'm pretty sure there was a lot of news coming out for Palantir. Oh, it's going to be the $150, $200, whatever, right? And you already have all the, so the way I like to look at the market is if I was a market maker or I had an interest in taking retail's money, what do I see on the chart and what do they see? I kind of put myself in both shoes, right? So let's say if I'm a retail trader and I wanted to get in at $20, I'm like, oh man, I missed the $20 pump. It's at $50 or, it's at $50 now. And then it pumps again, this huge pump, and it just keeps on going up, little pullback, goes crazy to the upside. So one, retail traders, they're going to feel a lot of FOMO because they missed all these moves and they don't want to miss the next one, right? So one, they're already emotional because they missed all those trades. And then from there, earnings, I think earnings was good. Yeah, they beat earnings and revenue. Not by that crazy amount, but a decent amount. And they probably had some news for deals and things like that and what have you. And from there, we get all these buyers stepping up, retail traders FOMOing in even more. So they're probably going to try to get in over here. Me personally, I'm going to wait for the proper setup to get me in the trade, right? Looking at the weekly, assuming I want to swing. I don't really like continuation, so I'm probably going to wait for a pullback. So like right now for Palantir, right? We have a failed 2 down. If I were looking to swing this, I would get in as soon as it breaks this high. Anyway, let me take a step back because I went too forward. Now, as a market maker, I already know that whoever's FOMOing in, they're going to start buying in this area in the hundreds, right? Me personally, that's too overextended, in my opinion. Granted, I could have said the same thing at $50 and we doubled that, right? Anyway, so then a bunch of good news starts coming out. Palantir looking to partner up with this person, this company, X, Y, and Z. So you have all these people FOMOing in to buy, and they think it's going to go up forever. And that's where you get them, right? And then from there, they start reversing price. So we get a 3 down on the weekly. For me, if the weekly reverses, I'm probably not going to be looking for buys until it's like a key level or if it reverses on the weekly, at least a swing it anyway. So I might have went off on a bigger tangent than I thought, but hopefully this is making sense so far. But basically, one last thing I forgot to mention. When you see Cramer start talking about stocks, that is a huge red flag to avoid it or just do the opposite of whatever he says. I think he might have said Palantir was a buy still at like $110. When he says that, probably going to get a reversal. And then there's a lot of people who, watch his show and, pick his ideas. So you got all those people jumping in who are getting obliterated on the way down. They're probably buying more as it goes down and probably losing even more money. So hopefully that made any type of sense. If it didn't, I can clear it up some more. But always pay attention to the chart and what the chart is doing, and you'll be fine because news is always going to be there to manipulate you. For the sake of the conversation, if I went long on this 2 up right here, and my stop loss is under that candle, I'm going to get out as soon as it stops me out, right? So once this went 3 down, I'm out of the trade because clearly the momentum is slowing down and reversing. People are probably taking profit, all that good stuff. Market also had a downturn and what have you. So now that we're kind of bottomed out, if you want to look at it as a market structure type of thing, we get this bullish TTO that prints right there. We get this resistance, price resist a little bit right there. We get this huge buy up right there on this big green candle, right? So now price came down. It's bouncing off this area where there's some support as we have these wicks over here. So that's letting me know there's buyers stepping up in this area. So if we were to reverse back up to the upside this week, it'll be a decent trade because we're still bullish overall. Quarterly, mega bullish, even though it has a lot of selling pressure. Monthly, failed. It might be a failed 2 down because they're getting bought up right now. And then the weekly, failed 2 down, probably going to get a reversal to the upside. And for those ICT traders, there's a volume imbalance right over here in this area. So some things to pay attention to.
Yeah, Friday QQQ kind of upset me because I missed the ride and I would have taken it, but I just hadn't looked at them for the day.
So you looked at QQQ later on and then it left you? Or you got annoyed or upset because it left you?
Yeah, because I just missed out on that activity. And I normally would have looked at it. And I took a look and I was like, oh, man. I see. And I was just scared at that point to try to jump in.
The only thing
I just missed QQQ altogether. Because I was just scared that it was going to reverse. That I had missed it, So
when were you looking at it? Like around what time?
I think it was around 11.
Your time, 11? Central?
Yeah, 11 or 12 in the afternoon.
Yeah, so like around 1 p.m. my time. Yeah, it's kind of topping out at that area.
Yeah. And see, normally I would have looked at it at 9 a.m., but I missed the whole thing.
The only thing that I would say to that, so you don't kind of get stuck in that, like I missed this thing. If you weren't looking at the chart, then in my opinion, you didn't miss anything. Because that's like me saying, oh, I missed 1,000% trade on SPX, which literally happens every single day. If you weren't there, then you didn't miss anything. Now, if you were on the chart and it printed your setup and you didn't get in, then I would say that you missed that trade or whatever it was that you were looking at. So like it's like the context that we attach to it, because you don't really want to go down that mindset path in the sense like, oh, I missed this thing. If only I was looking at it. Because if you looked at it at 1 p.m. and then all day, all it did was just chop, you're like, oh, I didn't miss anything. So it's always hindsight 2020, of course. So I would only use that language if it's like, if you were looking at it and you missed your setup because you were fearful or, what have you. Whoever's on YouTube, Live Now Be Free. What platform am I trading on now? Actually, before I get to that question, that makes sense, Shane?
Yes, definitely.
Sweet.
Yeah, because look at 10 o'clock. So 10 o'clock looks like, I'm not going to get a put. But then when you get around 10:30 or so, I see a 213 here, closer to 10 a.m. Yeah, right up in here. To me, that would have been, that 3 would have made me go in.
To the upside?
3 here, yeah.
Yeah, you pretty much have everything in your favor. We gapped up. So the 4-hour break was right here. So the 4 hours bullish. Is the daily bullish? Now the daily would be bullish if it breaks this high, which it did too. So you pretty much just getting back into continuity. And there was a 3 bar. So that would have been a nice one. Your risk is pretty low. Hold on. Well, what risk is that? Assuming you were using low of day. Not bad. And now 146. If you want to take it back to high of day, risk reward is decent on that trade. But hey, it's not the end of the world. There's always next week, right?
Yes.
And we learn by our mistakes. So cool. What platform are you trading on? So I trade options on Thinkorswim, and I trade futures on Tradeovate and other prop firms.
Just swim option.
Joe asked, funny username. What do you think of indicator-based strategies? For myself, they just add too much noise for me personally. I don't really care too much for them. They work. There's many great thing about trading is there's many different ways to make money. If you enjoy indicators, hey, keep on using it. I personally don't really care for it because I started off with indicators like, EMA crossovers, RSI, oscillators, MACD, so on and so forth. And it just caused more noise and like more of a headache for me. Once I discovered the strat, which is just price action based, it just made things simpler for me. So that's what I prefer. If it does work for you, hey, keep on doing it. I just prefer the strat because it's straightforward. It tells you when to get in, tells you when to get out, tells you when to do nothing. So it's pretty clear cut. Can you explain the numbers? I'm new to this indicator. I do follow Top Hat, but don't know what he is saying about the numbers. Well, the numbers aren't really an indicator per se. They just label the different candles. If you haven't already, I would highly recommend, Justin, that you go into the, what is that? It's in the Discord that I put in there. In the Strat Academy section, it breaks the entire strategy down. Now, to make life a little simple, I'll briefly go into the strat because I have way too many videos of that on my YouTube, and you're more than welcome to watch them on the strat that I shared with you, shared with the group and with him. Let me just bring up the ebook so we can see it together and just quickly give a brief overview. Give me a sec. I'm using my computer, so I don't have the ebook on this one. Cool. All right. Can I what? I can hear you. All right. Where is my other screen? All right, there's a million of me, and now we have the ebook. Let's zoom in a little bit. All right, so the numbers are just different candle types. So a 1 is an inside bar. It does not break the previous high or low. A 2 bar is a directional bar. It can be, if it breaks the low, it's a 2 down. If it breaks the high, it's a 2 up. And then a 3 bar, which some of you might know as a mother bar, engulfing bar, it pretty much breaks the previous high and low, represents expansion of price. and then we combine the candles together to get different setups, right? So there'll be like two continuation, pretty much breaks the high, bearish continuation breaks the low, a reversal where, let's say, this candle broke the low of the previous candle, then the next one breaks the high, bullish reversal, bearish reversal, so on and so forth. So the strat is basically price action simplified. So if you don't know what price action is, highly recommend that you study the strat. It helped me a lot. It was created by Rob Smith, rest his soul, great man. Wish I met him, but here we are. So that's the strat in extremely quick words. So if you're not familiar with it, definitely check it out. It's really helpful. Could you automate your strategy? The day I find out how to automate my strategy, I will be a happy man. Justin, you can also find it on my YouTube channel, which those channels will link you to. So if you go to, can you guys see my screen on YouTube? It looks like it's like lagging from switching over. Let me know if it pops back up. If not, that's weird. There we go. All right, the screen should be back up now. Do you have videos showing your trading live on Thinkorswim? Yeah, so if you go to the YouTube channel, the one that you're watching on right now, and you go to the playlist section, if you go to the trade recap section, it will, or the trade recap playlist, it'll show the live trading sessions that I've had and trade recap sessions where we go over my trades and other people's trades that you can check out. Is there a book from Rob Smith? I know there's a course that Rob Smith made. Last I checked, when I went to their website where he had it before he died, it was there for like $500. I went on like 2-3 months ago to show somebody, and I think they took it down. So I'm not sure if it's on the internet anymore. There are people who may have downloaded it, where you can probably get it from them. But I don't think it's on like his website anymore for whatever reason. It might be back up. I'm just not sure. I haven't checked in a while. So yeah, all I know is of the course. I'm not sure if he ever made a book or ebook on it, but you can see, I think it's like Sepia Group, SCPIA, and see where that leads you. Also, for those on YouTube, if you haven't already, hit the thumbs up or the like button. I need at least 50% participation for me to continue. Thanks. We all win. All right. So what other questions do you guys have? For those who are coming in, you can ask me whatever you want. It doesn't matter if you're a new trader, experienced trader, or a trader coming back to trading. Doesn't matter. Nothing such as a stupid question. We're all here to learn together. Yeah, I customized this one. I just went into the coding and removed it. So if you go into the Discord and you go to, where is this? Educational Center, and you go to scripts and indicators, you're going to go to, well, I'll link you to the post, but it'll be, where is this? There we go. I'll put it in the general chat. I'm going to tag you right now. So just add it to your favorites and then go to indicators and just add it there. Because the original one, I don't need to see the calls above or puts below because I already have my own levels. So, and I wanted more screen real estate, so to speak. So I kind of just edited out the code and just had it there. Cool. Any other questions you guys have? Put it in the chat. We're still here. Yep.
What are the pros and cons of using a 1 minute time frame?
I was gonna answer that. There's like instinctively a part of me was gonna come out, but I will refrain from that. And I'll just objectively answer that question. What can the 1 minute help with? If you're a scalper, that might work. If you want to potentially get in trades sooner, you can look at the 1 minute because price is fractal, right? When price is reversing on the 1 minute, the 5 minute, it already reversed on the 1 minute. So those are some pros. You can get in earlier on certain trades, depending on your strategy. The 1 minute can get you in earlier. Some cons, it might cause too much noise for you. So right now we're on the 15-minute time frame. If I go to the 1 minute, there's a lot of noise, right? You have a little mini TTO here, which would have been nice. But generally, there's like a lot more going on the 1 minute compared to, let's say, just the 5 minute, as we have here. So I find it easier to just trade on the 5 minute or higher. The 1 minute, to me, I used to use it like back in the day, and the 2 minute and the 3 minute, but the 1 minute just causes too much noise for me personally, so I just avoided it. But if you find out it works good for you, hey, keep it going. Definitely paper trade it if you're not new to it, because it can be a lot going on, to say the least.
Can you use the orb on 1 minute?
Potentially. I saw somebody say in a 100Ks group, they're like, I take the 1 minute orb. I'm like, you take the what? I don't have data on it. Maybe it works, maybe it doesn't. I guess pretty straightforward. Literally after the 1 minute candle breaks, just take it up and just wait. Went crazy on Friday. Your risk is pretty managed, assuming you're using the first 1 minute candle as your stop. I'm just not sure how good or bad it would be. I don't have the data on that. But if you want to, do it for us and let us know next week what you discover.
I was thinking about doing some back testing on 1 minute, so just want to hear your thoughts.
I'm here for it. Like I said, I always encourage you guys and, as my student and the others to experiment, because even some of my setups I discovered through you guys and we just refined it together. Like I didn't take the 15-minute orb or even the retest until maybe like last August or July, until one of my students, he's like, your 4-hour level and my 15-minute trade kind of like go hand in hand. And I was a little confused in the sense of like, I'm like, all right. I'm like, show me, right? Like, show me what you do exactly. And then basically, sometimes his 15-minute level and my 4-hour level will like kind of be the same price, which kind of got me intrigued. And then when he showed me, I'm like, oh, you're pretty much taking like a retest of that specific level. And then I'm like, all right, how can I refine this to work better for my brain? Because he like adds some ICT stuff to it, which I don't, since I don't really study, I don't really know ICT to that degree. So I'm like, let me see if I can make it a little simpler for myself. And then here we go. The retest was born. And probably some other setup that I can't think of right now. But yeah, definitely experiment. Maybe we get another great trade or setup that we can add to the playbook and make money off of. So I always encourage, experimentation. How much are your one-on-ones? I think I'm mentally ready. So live now, my one-on-ones are 250 if you don't know me in a group. If you do know me in a group that I support, it's only $200. If you're in my group, then it's 50% off. Loki asked, how do you know when you're supposed to sell and get maximum profit? Great question. Before I answer that question, Loki, I want to ask you, how do you determine when you're supposed to sell and get maximum profit? And then I'll tell you how I do it. And while you're answering that, I'm just going to read Alex's statement. He said he was talking to some dude on Reddit who trades a 3-minute orb. He said he uses volume also. He made 25K just doing that. Beautiful. So yeah, Loki, let me know if what you do when you're supposed to sell, and usually when you see 2 red candles, on what time frame? On what specific time frame, Loki, when you see 2 red candles, or I'd assume 2 green candles if you're short? The 5-minute. SM and Gus, I'll answer your question in a bit. Let me finish up with Loki, trying to get some clarity. So Loki, just so I'm on the same page as you, basically, if you get into a long trade, you're waiting until 2 red 5-minute candles to get out of the trade. And is it 2 back-to-back red candles, or just 2 red candles in general? I don't really like that personally, in my opinion, because you can potentially give up a lot of profit back depending what the setup is. I'm just going to use the example of Friday. Actually, I won't use that because it was news based. But let's just say, for the sake of the conversation, that let's say we have a bullish TTO right here. If you don't know that, I'll try to make it make sense. But generally, TTO is just where's my path tool? So a TTO is basically just a pullback in the direction of the trend, and then it keeps on going up, or a retracement before it goes in the trend. So in this case, if I were to get on this TTO to the upside, like this, let's say, and my stop loss is usually, let's say, under the TTO, for those who know that setup. And let's just say I have one target at this high and then another target at, I don't know, let's say 480.50 for the sake of the conversation. So for me, it just so happens that I would be getting out in 2 red 5-minute candles, which is basically right over here. Now, I'm not really going to wait until the candle closes, because let's say the candle closed all the way down here. Now I'm taking a bigger loss waiting for the candle to close. So for me, it's kind of just based on structure and like price action. So if it stops me out at this price, I'm getting out immediately and just calling it a day there and taking my L gracefully. So maximizing profit, you may want to use higher time frames for that, or you can trail your stop loss with price as it goes in your favor. So let's say, for the sake of the conversation, as another trade, we're looking at this 2-1-2 up right over here. And let's say my stop loss is under the one candle. And I'm aiming for, let's say, this high over here. So second target is right there. First target is this high there. So once it's that price on this candle, I'm going to take some off. And then what I'm going to do is my stop loss is now break even or slightly above. All right. And let me just draw this box so we can follow together. So let's say once I hit my first target right over here, I'm going to move my stop loss up under each closed 15-minute candle. So as soon as this one hits the first target, boom, I take one contract off. I have one more left. So now my stop loss is right under this candle. When this candle triggers higher and closes, I'm going to move my stop loss up there, right behind this candle. And then this one triggers up, closes, move my stop loss under that candle. This candle looks like it triggered up, but it was a failed 2 up, came back down. My stop loss is going to be right under that red candle. And now I secured an additional pretty much $3 on the runner. Granted, it looks like it hit the target, but let's say our target was a little higher over here. So this way I can maximize the trade for my runner or my second contract instead of just like moving my stop loss while the candle's still open. So this usually helps me stay in a trade as long as I can to squeeze as much juice as I can. One thing to note, depending how big the candle is, I may opt in to take a little more profit off the table, because if I'm trading futures, one candle could be 50 points, which is like $250 if I'm using my full size. And I don't really want to give away $250 personally, waiting for like an extra $50 to hit the target. So that's just me. But this is one way that you can kind of trail your position and maximize or get some more profit out of the trade. Did that make sense? Was it helpful? Let's see. Yeah, let me know that answer, Loki. Alec, to answer your question. Cool. Alec asked, how far into a funded would you wait until you step up to 10 to 15 micros, assuming you're using 5 or 10? I built a $500 buffer, but kind of worried with the ATR being so high. To me personally, a $500 buffer from what price? So if you have a $50,000 account, are you at 53, 50? I can't even speak anymore. $53,500. Is that your buffer? Or gotcha. I personally like a little more leeway. Personally. Oh wait, hold on. Let's see what price he's at. He's at $5,000 or $50,500. I would not increase my size yet because, number one, your drawdown is still the same. If you're using Top Step, it's following you. Remember, the initial stop is 48,000. So if you got to $50,500, your stop is still $48,500. So it followed you. So you still have the same drawdown. Now, for me personally, I just used the same amount until I passed the account. And then after I passed the account, I still use the same amount. Get your payout, of course, when you can, just to get it, right? You don't want to blow the account. And then from there, from 50K, I grew the account to 55K. And then to me, 55K is zero. So I have a $5,000 buffer now. So anything above 50,000 or 55,000, I withdraw everything until 55,000. It may take a little longer to reach that if you're still using 5 or 10 micros. I'm just a little conservative when I trade. There are some people that I know that are more aggressive, but I'm in no rush. Take your time. That works for me. And then once I get a 55K, I'm more likely to use 2 minis as opposed to, let's say, 1 mini until then. So that's me personally and what works for me. So I would just kind of stick with the same size until you pass, and then until you build a nice buffer in the account. And remember, don't underestimate compounding your gains, right? I was talking to somebody the other day. I'm not sure if it was in Discord or on Reddit, but some dude was saying, like, I think he went from like 1,000 to like 1,500. I know, I remember it was some dude on Reddit and one of my students. So the dude on Reddit, I think he was like at 1,500 and he was like selling covered calls. Also, I'm going to answer the covered calls question in a bit for whoever asked me in a bit. Anyway, since he had a small account, it was kind of taking him a longer time to build it. But again, it is what it is, right? We all start where we start. I started with about 200, then I put 600, then I lost 600, and then I put 800, and it kind of started with 1,000, grew that to like 3,000 or 4,000, then I grew that to 56K, or 48.8K. That's what I grew it to. Granted, that was during 2020 when you pretty much made money buying literally anything. So it was easier for me, right? I was blessed to start trading during that time. But again, that was part of my journey. If you're starting out new, you may be a little slower to get there. Sometimes you'll get really, really big wins, which is fantastic. But the biggest thing is just take your time, compound your wins and your gains, because the dude was saying on Reddit, he's like, I want to use 50% of my account in the next trade to grow it faster. But I'm like, you need to understand that if you use 50% of your account, what's going to happen is, what if you lose that trade, right? Let's say you're stubborn and you lose 100% of that trade. Now you're at $750 and you gave up 5 months of work in 1 day or 1 week trying to speed up the process. Not only are you further back from where you started or where you were, now it's going to be even slower because you only have 750 to trade with now, as opposed to the 1,500, right? So in the beginning, it's always going to be slow if you have a little bit of money, and it just gets easier over time, right? Like the other day, I bought 100 shares of NVIDIA. It was $10,396. And in 2 days, it jumped up $10. Jumped up $10, give or take, for my entry. I made $1,000 in 2 days, right? But for somebody who may only have, let's say, $2,000, they can only get 20 shares. So they would only have made $200. But again, this takes time, right? I've been doing this for almost 5 years now. But again, take your time. The market is not going anywhere. You have a lot of time to make money. It all grows. And as long as you're making money consistently, that's all that matters. Because again, it all adds up. If you have $1,000 account and you're making $20 here, $30 there, $50 there, that can be an extra $200 to $300 a week, right? Or let's assume, for the sake of the conversation, you have 3 winning weeks out of 4. That can be an extra $600 to $900 on top of your $1,000, and now you have $2,000 or what have you. So take your time. Grow the account slowly, respect your risk management rules, and you'll be just fine. Every time you find yourself trying to rush the process, that's when you get in trouble. And ironically, people rushing the process, slow down the process or make it take even longer for them to reach their goals. So hopefully that made sense.
Shortcuts don't work.
What doesn't work?
Shortcuts doesn't work.
Oh yeah, definitely not. Try to take a shortcut, it's going to be a long cut somewhere else. All right. SM asked, how do I find my key levels? Well, it really depends on. For me, the key levels can be weekly lows. Oh, nice W on QQQ 4-hour. A dirty one, though. Key levels could be daily lows. So you could just mark off the previous daily low, weekly high, weekly low, monthly low, stuff like that. If you trade the strat, you can use broadening formations, which is support and resistance for strat users. So these lines you kind of see throughout the screen, those are support and resistance for strat users. Since we don't use just straight lines or like, what is it, supply and demand? We don't use that. We just use broadening formations. So those are our key levels. If you're not sure how to find them, I'm not really going to go into it now because I have an entire 30-minute or 1-hour video on broadening formations, which you can find in the strat playlist on my YouTube channel that you're watching on right now. Cool. Gus, if you're still around, you asked, would doing covered calls guarantee profits if you're buying shares at a low price and intend to keep for 2 to 5 years? I'm going to say no to that question because, in my opinion, nothing is guaranteed in the market. And it depends on your strategy, right? Because the way I trade covered calls may be very different from how you might trade covered calls, right? So covered calls is a neutral strategy in a sense where you're long the shares and you're short the call contract. So it's good to bring in additional income. I definitely love doing it and selling premium in general, which is fun. If I'm going to hold something for 2, 5, 10, 20 years, let's say for the sake of the conversation, let's turn these off. All right, so let's say I have 100 shares of Apple and we have this bearish reversal off of this broadening formation. So as soon as this low breaks on the daily, I'm going to sell my call, right? Whatever that may be, whether it's 2 weeks out, a month out. I usually do a month out, month and a half. And let's say my stop loss is 50% of this candle. And then let's say I'm targeting this broadening formation right here, this line right there. And let's bring up an options chain so we can see this together. Let's look for Apple. Short call. All right, let's see. We're May 15. I'll probably sell April 15 contract. Strike price is, hold on, what price is this? 234. Well, price is pretty low, so the premium is not going to be good. Let's just assume that the 215 strike price is the 234 that I would have sold. What's the premium? Where is this? All right, so the premium is 720 or yeah, $725. Is that the last price? A little weird on this. So this is the bid. So the mid price is 730. So if I sell that, they're going to give me 730 on the spot. So 730 is going to be credited to my account. And let's say the target is $4, and it took basically 1 day to get there, as we see here. So where's the theta? So theta is 26 bucks and the delta is 49. So let's say it's $4 to hit our target. So we would just multiply 49, let's just say 50 to keep math simple. So that's what, 200 bucks and plus what, 26 for the theta. So 200, oh, whoops, 12 bucks for the theta. $212, let's say. So if I were to buy back that contract, so remember, I sold it at 730. So plus 730 on the account, or $730. And then I buy it back at, let's see what the price would be. Let's do some math real quick. So that's 730 minus 212, 518. Which would be 518. And then I pocket the difference. So I basically made $212 on that trade, on that covered call trade. Now, of course, if you want to let it run, if you think there's going to be a bigger drop, you can basically just hold on to that position. So let's say if I held it till, let's see, what would that be? So 730, let's just say divided by 50. Well, 6 days. Whoops. 12 days. Give or take about 14 days worth of delta. So if I held this contract for, whoops, not 14 days, 14 points against you. So if it went 14 points against me, or in my direction, which is down because I want the call to lose value. If it went $14 in my direction, this contract would be worth $30 because it lost $700 worth of value. And with 2 days passing by, which the theta was 12 bucks, that's 24. I can buy that contract back at basically like 10 bucks, and I can pocket 720 bucks in 2 days. Granted, your shares are going to be down if you have 100 shares, about $1,400, but you still made profit on that 700 and something move from the premium. Did that make sense? Was it confusing? I went over a lot. Gus, you are not guaranteed $700 because you need to either buy the contract back or you need to let it expire worthless. Now, if the contract is, remember, you're making the difference between when you sold it at and when you're buying it back at. So if you sold it at 700 and they give you 700, so yes, you're guaranteed the $700 in the sense that you're getting that up front. You're getting the $700 up front, but you're not guaranteed the full $700 until you close the trade. If it ends at zero, if the contract is worth zero, the premium, or whatever it is that you sell it at or buy it back at. So if I buy it back at $350, I only made $350 because I'm buying it back at $350. So I'm giving back the difference of the premium that I made. So do I get the $700 up front? Absolutely. Are you guaranteed to keep that whole amount? Nope. That's really based on the setup that you take and the market and what it wants to do. Now, let's say you sold the covered call and you sold, you bought or you sold it at 700, and it goes 14 points against you to the upside, which is what you don't want. That contract is worth $1,400 now, which means the covered call is down $700. So you're pretty much down 100% on the trade, but your shares are up $1,400. So you made $700 net, assuming you were to sell the shares and the call or buy back the call at the same time. And you also run the risk of getting your call or your shares called if you hold until expiration and the call is in the money. So you might still be net positive. It really depends on your risk tolerance and what you're trying to do. But I like to use a stop loss always, regardless of the strategy that I'm using. Does that make sense? Sweet. Definitely not my advice, just my idea, because I cannot give advice. Not yet. Give me like a few months. All right. Alec asked, has your Dirty W win rate changed recently? I've been seeing the Dirty W entry has been working recently, but you have all the data. Alec, I haven't been really taking them unless it's a 3 or a hammer. I probably haven't taken one in like a month or two, so I can't really say yes or no. You know, you tell me if it's been working for you. Let me know your win rate. But I haven't been taking them recently. I personally don't prefer to take them. Sweet. Alec, what do you use a trade tracking software or like a journal, like a online trading journal, anything like that? Gotcha. So in your case, you might need to do it manually, where basically what you're doing is, let's say you took 10 trade. I like to do it like the specific month and year to date. So let's say if you took 10 dirty W's in February and only 8 of them won, your win rate is 80% for February. And then let's say if you have taken 20 from January to the end of February and you only won 10 of them in total, then your overall win rate year to date is 50%. So you can kind of track it like that. That's how I like to track it. I still have it like overall for the year and like for previous years. But that can kind of give you an idea of how it performed that month, how it performed in the year, things like that. But I loved collecting data and getting very, very specifics. So like one thing that I've learned recently, as I'm sure you have seen and others who take the 15-minute orb retest, if the VIX is above 20 or Trump is talking, do not take the setup. It's probably going to fail. And I think like the second half of February, I got slapped up with that setup. Every single time Trump came on, loser. Every time he didn't speak, it worked out perfectly fine. So for me, I'm waiting until the VIX goes back under 20 to bring down volatility a little bit, because it was rough for those 2 weeks in the last 2 weeks in February. But the regular orb has been printing, so it works out. And you always want to pay attention to that, right? Like as traders, we always want to adapt and see what's going on. Because I'm like, this makes no sense. How is this setup so good, but what has changed, right? Volatility has changed. For YM, we're averaging like 600 points a day, or like 5 to 600, or 550 to 600. Now we're like 750 to 800 points a day, which is crazy, right? It's like a 30, 40% increase if my math is correct. So you always want to see what's going on with the market and, size down if you need to, or just even avoid a specific setup altogether. Like the regular W hasn't printed, like it rarely prints in February from what I've seen. I maybe took 3 or 4, if that. January, I probably took about 8 to 10. December was fantastic. There was like 18 that I took, and I think more printed as well, but I only took 18. So we will see what the rest of the month holds and next month. They got to turn on that W algorithm because that's a money printer. Cool. Hey, Marcus. Thank you. I appreciate that. I'm glad the futures videos helped you out. Are you brand new to futures? Sweet. What ticker are you looking to trade for futures? Like to start off with. Sweet. Fantastic. Yeah, MES or M2K, which is the micro Russell. Those are definitely good ones. Definitely paper traded, of course, until you get, consistency under your belt and you know what you're doing, because it can go really south if you don't know what you're doing. That goes with everything, futures, options, all that stuff. But yeah, man, welcome aboard to the no theta land. No more Greeks, no more options chain, no more strike prices, just price action. Fantastic. Yeah, definitely don't want to blow your account either. And that goes for any new traders that may be here. People who are not making money, but you're using real money. That makes 0 sense. If you don't know what you're doing or you don't have a working strategy, you do not want to be using your real money until you know what you're doing. Hey, later, Alec. Thanks for coming out. Speaking of which, it is 9:08, so we're a little over. Do you guys have any other questions? I'll take 1 or 2 more. And if not, let me know what your biggest takeaway was or what you learned in today's session. And we will wrap up and go enjoy our Saturday. Live now and be free. If you're looking to work with me, if you go to the description of this video, or if you go to the YouTube channel, let me see if I can bring this up. Where is YouTube? Cool. So if you're on the YouTube channel, you can see my beautiful foreheads right over here. And right up here by the logo, if you're on the desktop version anyway, if you click on where it says more in the bio, it'll give you all of my links. If you want to send me an email, send me a message, so on and so forth, let me know. I'm always available for the most part. But yeah, If you want to book a free call so we can talk and see where I can help you, you can do that as well. And we'll chop it up. Cool. All right. What was everybody's biggest takeaway before we wrap up and enjoy our weekend? Put it in the chat. Whatever you learned, could be big, could be small, it doesn't matter. Oh yeah, Isaiah, it's just on the YouTube. On the Discord, I still have the chart showing. You guys are already in my Discord group, so you already have all my information. Gotcha. If there isn't anything in the next minute, we will head off. Apparently, nobody learned anything today, so you guys better be master traders by the next time we talk next month. All right, looks like everybody's professionals. Enjoy your Friday, everybody, or Friday. Enjoy your Saturday, everybody. Thanks for coming out. I will see you guys next month. For those who are new here again and just tuning in, we're wrapping up. We have these every third weekend of the month. You're welcome to subscribe to the YouTube channel, hit the notification button. So when I do release these, I usually release the video at least a week in advance so you can hit notify and they'll let you know when we do start. So where's the Strat ebook? Depending where you know me from, it's either in the Strat section or you can send me an email at ceruleanmindacademy@gmail.com and I will send it to you. Cool. Well, I'll see you guys. Thanks for coming out, asking your questions, and enjoy your Saturday. Good night.